Well, folks, it is official. Trump has won the election, and Kamala Harris has went ahead and called Trump. I'm sure the call went something like this. Hello, Donald. Congratulations on winning. I'm so happy for you. I'm sure the call went something like that, but let me be the first to say thank goodness the election is over. I am so sick of all the political ads seeing 24/7. Thank goodness. Okay. Now, President Trump is talking about a golden age in America, and the stock market is insanely excited about this. We got a complete melt up. This is a complete melt up going in the stock market right now. 1,445 points. The Dow Jones Industrial Average is up today. I've been telling everybody, Wall Street wants Trump. Wall Street wants Trump. A lot of people didn't listen to me. I kept telling them for months now, trust me, Wall Street wants Trump. And I think now people are finally realizing it after this move, right? The Russell 2000 is up around 5.5% today. 5.5% to new all-time highs. The volatility index, the VIX, has completely collapsed. I mean, completely collapsed, down over 20% here today. Okay, we've got to talk. Can this market boom continue? I think it's something we have to address. Can this continue on? And let me say, you might not have seen anything yet, folks, okay? We're going to speak about if this market boom can continue, okay? Because there's a whole mess to sort out whenever you're in one of these situations where you got this happening. We'll sort it all out, okay? And we're also going to talk about what stocks are a trap in this market versus stocks that have huge upside. Because I'm seeing some people walk into some traps, and we'll walk into some traps over the next couple months here when they're going to completely miss the biggest opportunities over the next few years in this market. So we're going to address that in this video as well. As my garage says, I got a big sign in my garage that says, hit the like button. That's all I ask in return for today's video. Do me one favor, one solid, hit the like button. Somebody said, what happens when you hit the like button? I said, 50 years of good luck, maybe, something like that, okay? Appreciate y'all joining me. Thank you for being subscribed to the channel. Also, new all-time high subscribers in the history of this channel. If you're looking to access my library of premium courses, become a master of the stock market, millionaire playbook, stock options mastery, dividend investing mastery, get access to my private Discord chat, all those sorts of things, pin comment down there. You can click on that, fill out a form. We'll see if we can get you access to that. Alrighty, folks, you ready to rock and roll? Let's get into this. So it was about 5 or 6 days ago on the channel. I did a video called "The Stock Market is About to Go Nuclear," right? And in that video, I laid out the whole process on essentially what's going to be transpiring in the stock market from here, right? And I'd been talking about that in videos for, honestly, weeks at that point in time, maybe even a month or two. But I wanted to just do a full video so people could really understand everything that's going on there and just really focus that video just on that, right? And if you're wondering, does the stock market still have room for upside ahead? Here's what we're looking at. As of the latest data, there's over $6.5 trillion in money market funds. They're estimating well over $2.5 trillion just from retail, and institutions near $4 trillion. Absolutely shocking numbers. So there's been a lot of money that has not wanted to go in the stock market, and it's not wanting to go there because, one, you can get basically a guaranteed 4 or 5% in treasuries and savings accounts, CD accounts, those sorts of things, right? So people are like, I don't really want to take risks. And also, the other factor is a lot of people haven't been that happy with the economy, so they haven't felt great about investing in the stock market, right? They say, I don't know about things. I'd rather just be in treasuries, rather just be in savings accounts, rather just be in CD accounts. I'm not sure about what's going on in DC. I'm not sure about what's going on with the consumer, all those sorts of things. So a lot of people just haven't been interested to buy stocks really since 2022, in the epic fall of 2022. Now, those of us that stayed in the market, we have prospered. If we were to go back, the public count today is at an all-time high, well over $2.6 million. If we go back to about right around 2 years ago, from 2 years ago, right? The public count was right around $1 million, roughly, right? And at the lows, I think it got down to $984,000. And now it's over $2.6 million, right? And that's on minimal deposits over that amount of time, like very small deposits. And so it's been incredible for us that stayed in the market. But a lot of people, we got to understand, have not won a piece of this market. They left the market in 2022 and said, peace out. When I feel like things in the country are changing for the positive, I'll get back in the market. But until then, don't talk to me. I'll go ahead, sit over here and collect my 4 or 5% guaranteed, right? And so that's a decision certainly people made. It was the wrong decision. Let's just call it the way it is. It was the worst decision they could have made because they just missed out on so many easy stocks to make 100% gains, 200%, 500%, 700%, 1,000%. Like we're talking about, these aren't hidden stocks. Meta, imagine just buying Meta 2 years ago today. Nvidia, buy Nvidia 2 years ago today and look at the gains these stocks have, right? Just like right in front of your face. So, but the moral of the story is a lot of people haven't wanted to play this game the last couple of years, right? Now, I always react to videos all the time on the reaction channel. If you guys don't know, I have a reaction channel. It's called Jeremy Lefebvre Makes Money. Sometimes I react to articles. A lot of times I react to videos. It can be, clips from CNBC. It could be some sort of clip from Bloomberg or just other outlets and things like that, right? And many times I'm reacting to these videos, and so I get a chance to see what the Wall Streeters are talking about because Bloomberg, CNBC, they have all these Wall Streeters on, all these analysts of stocks, all these folks that run hedge funds and other types of mutual funds and all these different things, right? Actively managed ETFs. And so I get to get a really good insight on what these folks are thinking, right? And I love having that channel. I think starting that channel was one of the most best ideas I've had in honestly the last several years because I love to hear where they're positioning. Not because I'm looking to follow them. If anything, I'm looking to go the opposite way of them. But what have I heard countless times from these Wall Streeters for really the past, let's say the past 2 to 3 months? Be cautious. Market's going to downdraft into the election. Maybe we rally after the election, but you don't want any part of the market August, September, October, right? And especially at that beginning of August when we had the Japanese carry trade situation happen. Oh man, that went south quick. And then people were like, "Don't touch this market." And I even took this screenshot. I still have it on my iPad. I took that screenshot September 3rd because that morning of September 3rd, Tom Lee, who's seen as one of the biggest bulls in the stock market, right? One of the biggest bulls. He goes out there on CNBC and he says investors should be cautious the next 8 weeks. And when the biggest bull comes out and says, "You better watch out, you better not cry," people say, "Oh boy, button up the hatches," right? And the stock market sold off heavy actually that morning of September 3rd, right? And then you can look at the stock market ever since then, and it's been up and up and up and up and up and up and up, right? But that's what a lot of people are felt. And so a lot of people are like, you know what, I don't want a part of the stock market. So a lot of weak hands sold in that early August timeframe, right? And they said, I don't want any part of this market. And so they sold out. And now those folks are like, what am I going to do, right? You guys remember this? This was just 3 months ago. I think I reacted to this video on the reaction channel, if I recall at the time, right? The professor, Jeremy Siegel, he went on CNBC. He says the Fed needs to make emergency rate cut. Cut it. He was freaking out, right? He's like they need a cut. They need to make emergency cuts, substantial cuts right now. He was flipping out. Oh my God. So you had some people straight up panicking, right? Straight up panicking about what was going on. Then you had other people saying, be very careful, be very cautious in this market. Meanwhile, I'm looking out there, I'm saying, like everything was lining up to be more bullish, if anything, rather than on a bear side. I mean, what's happened over the past 3 months? Inflation problem is completely done. Like inflation's been done really for like 6 months now. You couldn't really make a debate about it, but for the last 3 months especially, like inflation's gone. Like it's not a problem anymore. We're at like a 2% CPI now at this point in time, right? The Fed has entered a cutting cycle. There's not like a debate like, oh, the Fed gonna cut. No, they're in a cutting cycle now at this point in time, right? They made their first cuts a couple months ago. Employment market's held up tremendously strong. We're still at 4% range for unemployment. We'll take that any day of the week. The U.S. economy can have 4% unemployment. We will gladly take that, right? The odds of Trump winning the election started going up and up and up and up. And if anybody that in my opinion wasn't biased and could just look at it objectively, kind of started to figure out like Trump's going to win this election, right? And then big tech earnings came out. Those were insanely strong. Why does that matter? Well, big tech is the ones who run the market. Look at the biggest weightings in the NASDAQ. Look at the biggest weightings in the S&P 500. What are they? Big tech companies, right? Additionally, you have real wages coming back very strong now at this point in time because inflation's finally chilled. But meanwhile, wages are still much stronger than where CPI is at, right? So let's get this right. Inflation problem done. Is that bullish or bearish? That's bullish. Fed entering a cutting cycle, but they're not cutting because unemployment's skyrocketing, right? That's bullish. They're cutting because the Fed funds rate is too high based upon where CPI is at right now. The employment market being in the fours, is that bullish or bearish? That's bullish. If you want to look at it, like most people would look at it as Trump winning the election being bullish for stocks, bullish for the economy, right? Big tech earnings strong, bullish. That's very bullish. And real wages coming back strong, that's very bullish for the consumer for 2025, right? In 2026. So you add up all those things, and at the end of the day, if you're wondering, can the market boom continue? It could easily continue. I can give you 6.5 trillion reasons why the stock market boom could continue on here, right? There's a lot of people that are not positioned in this market, right? And they're going to look at this market, and I think given this backdrop, I think it's going to be very difficult for people to still stay on the sideline and say, I don't want to buy. Because they're looking at like, where's the big crash coming from? Is the Fed magically just going to start raising rates again to crash the stock market? No, they're in a cut cycle. Is inflation just going to magically go out of control in the next 6 to 12 months? No. Maybe 2 years from now, it's a different story. Maybe 3 years from now, but not in the next 6 to 12 months. Is the employment market going to magically break and the unemployment rate going to go to 8-10% all of a sudden? That's not very realistic here in the next 6 to 12 months. You know, if you're somebody that likes Trump and you like his economic policies, I think it's very hard to stay on the sideline now. So, and if you care about the stocks that run the market, those earnings are incredibly strong. Look at Meta's earnings, right? Watch NVIDIA's next earnings report. Get ready to have your flapjacks flipped. Like, look at these companies one after, even Apple, the sleepy Apple still had a respectable earnings report. And you got real wages coming back strong. Like, what is there to really be, let's say, bearish about for the next 6 to 12 months? You don't really have much. So with all that money out there, it's hard to not see a good amount of that money flowing into the market over the next few months, right? Now, what about what stocks are trapped in this market versus the stocks that actually have huge upside ahead, right? Because I'm seeing people already kind of get it trapped into some stocks that maybe don't have the most upside when there's other opportunities out there that have immense upside. Well, right? Tesla here today. Tesla's up massively. Everybody sees it. Tesla stock's up over 14%. 14% here today. I mean, as a Tesla shareholder, I love this. I mean, we love this. Like, gladly take a 14% move. That's a $46,000 move for me today, up in the public account just based upon Tesla shares, right? So there's a massive amount of excitement around Tesla stock here today, right? It's apparent in that price move, right? Over $100 billion of market capitalization has been added to Tesla stock here today. And there's a few reasons for why this is happening, right? One is there's a belief, especially since Elon Musk has obviously cozied up to Trump over the past 6 months or so. There's a belief that Trump is basically going to make it much easier for Teslas to be allowed to drive themselves, okay? And so there's not as much fear from the regulatory side in regards to that. So that might be a belief and that might be true. I don't know. We'll see. We'll see when Trump's actually in office, which he's not in office for still several months from now, right? But there's a belief like, regulation that's going to help Tesla in regards to that, right? Second thing is China, Mexico. So there's like worries or concerns about the Chinese EV makers making EVs in Mexico and then flooding the U.S. market with that, right? And really devastating Tesla and other markets and other automakers in general, right? Now that Trump's in office, there's seen as an extremely low probability. And by the way, I think there was an extremely low probability whether Trump was in office or not. But some people had a fear about that. So now you take that out of the market, right? And then additionally, Trump's going to likely put a lot of pressure in 2025 on Jerome Powell to lower rates substantially, especially if the Fed's not moving as fast as Trump wants the Fed to move rates down. Then I think he's going to put a lot of pressure. And so lower rates ultimately mean, a lot more people might be able to afford Teslas, right? And so that could be seen as all positives. And so people are jacked up, and they jacked the market cap up over $100 billion here today, over $100 billion, right, on the back of this. But the thing you've got to understand about this is, are these things that are going to change Tesla's financials in any substantial way in the next couple of years, right? No. That's not changing Tesla's financials in the next several years, honestly. And even when Tesla does have their robotaxi fleet out there, which that might still be 2, 4, 6 years away, right? the revenues are going to be extremely small compared to Tesla's overall base. Like if you look at Uber's revenues versus Tesla, you're going to see exactly what I mean. And Uber's just like a massive Goliath company, right? You think about them giving rides everywhere, and still compare Uber's revenues and compare it to Tesla, and you'll start to realize, oh dang, like it's not as exciting as people think. It can be a big profit generator for the company whenever it gets scaled up, which the scale of that is still like 5-10 years away. So robotaxi, in terms of big fleets out there, you're still several years away from that. In terms of being a big profit driver for Tesla, you're still 5-10 years away from that, right? So none of these two are changing Tesla's financials. If you're thinking like, oh, Tesla's massive growth is just going to be back overnight, as a Tesla shareholder and somebody that's been invested in this company since the dark days of bankruptcy talk, right? Guess what? Like that's not magically changing. Now, if he gets Jerome Powell to lower rates substantially, really, really quickly, right? That can help out Tesla's business model, sure. But it's not as good as it seems. And here's why. If you have been paying attention to the Tesla story, you'll understand that Tesla's been offering ridiculously low interest rates. In some situations, I've seen even like some zero APRs. Like it's ridiculous. And so just understand that interest rates going lower is not going to help Tesla nearly as much as you think it's going to help Tesla. If you've really been paying attention to the rates they've been offering this year in 2024, right? So it can help, but it's just not like, oh my gosh, this is like a night and day difference. No. So the main reasons everybody's getting all jacked up here, I'm just here to tell you as a Tesla shareholder and somebody that knows this company inside and out, it's not as exciting as it might seem. But the market's taken that, right? And so Tesla, if we run a little valuation model here on 1000xstocks.com, right? So let's assume Tesla can get back to 20% revenue growth, which would be very strong, good revenue growth from the company. And they can average that from 2025 to 2028, 20% a year every year. And net income could expand even faster. And so, which I think net income for Tesla will expand faster than revenues, being that they can always figure out how to bring down cost of manufacturing. And additionally, they're going to get heavier and heavier services over the coming years, right? So I could see net income growth of 30% if they're doing 20% top line growth, right? So, 20% top line, 30% bottom line, you could probably command a 50 to a 70 PE ratio for Tesla if you're growing at those sorts of growth rates, right? Where's the compound annual growth? Basically, you're getting no growth really in the stock for the next several years. And if we go all the way out to 2028, you get 1% CAGR on the low end, 10% CAGR on the high end, right? That's not the most exciting opportunity. Now, in order for Tesla to actually be a great performing stock, we're going to have to get the major growth days back. When I'm talking about major growth, I'm talking about revenue growth of 30% plus year in and year out, right? So 30% type growth rate in 2025. Do I think they're going to grow revenue 30% in 2025? Probably not. I think they could grow 20% in 2025. I think maybe even 25% in 2025. But in terms of 30%, I think that's going to be really difficult. Same thing for all these years, just to be quite frank. Like I'm kind of thinking about Tesla's more in the 20 to 25% type growth numbers, right? And net income growth of 30 to 35% on average per year. But if we want to get really bullish and say 30% revenue growth, 45% net income growth, if they're doing those sorts of numbers, the company can probably command a 60 to a 90 PE ratio, which then gives you a compound annual growth rate on the low end of about 18%, on the high end of about 31%. So there you go. But you don't want to necessarily be banking that Tesla's going to get back to the unbelievable, ridiculous growth rates. I wouldn't bank on that, right? I would kind of be thinking about Tesla more in a 15 to 25% revenue growth, in kind of in the 25 to 35% earnings per share growth, right? Which makes it great as somebody that holds a stock, but somebody that's, flushing in money thinking you're going to make crazy gains past 2025, be a little careful when it comes to that, right? Palantir, people are flooding in money, and as somebody that's a Palantir shareholder, it's beautiful, right? Up another $19,000 on Palantir stock here today in the public count. That's now a $300,000 plus position for me. And I only put $49,000 into the stock, right? This is also not the biggest opportunity in the market. Like, can Palantir be a moneymaker over the coming years? Yeah, it could be a moneymaker over the coming years, but it's not nearly as exciting as people are making it out to be. And here's why. Because the stock's gone so insane now, even the 2-year out forward P is over 100. Now, It's one thing if your trailing 12-month P is over 100. It's one thing if your forward P is over 100. It's a whole other ball game when your 2-year forward P is over 100. And that's what we're dealing with Palantir in regards to this, right? Which puts us into a very tough situation in regards to getting any substantial gains really in 2025 for this stock and 2026. It's going to make it very difficult because we have priced in so much now. Like so much has been priced in. So people may continue to pile into Palantir and they might be very let down by the return profile of Palantir stock in 2025 and 2026. Now, as a Palantir shareholder, I would love it if the stock continues to boom in 2025 and boom in 2026. And maybe they get to a 40% revenue growth rate, 50%, something like that. As a Palantir investor, whew, I will be the happiest camper imaginable, right? But I wouldn't bank that necessarily Palantir is going to get to 40 to 50% growth rates. 30% was realistic. I could always see like how Palantir was going to get back to 30%. And I've been talking to people about that, and sure enough, they did it, right? 40 and above 40%, that's where I'm like, ooh, that it's not impossible, but it's going to be very difficult. Very difficult, especially when they have to start comping against these quarters next year. And so people are piling into this stock, and they might just be a little let down by the return profile in 25 and 26, okay? Now, once we get past that time, let's say that the stock has a couple year chill out period, right? And it just kind of flounders around. We might set ourselves up for the next big bullish cycle after that, right? So the moral of the story is, people are piling into some of these names, and it's like you should have been piling into these names 2 years ago. Like 2 years ago, Tesla was $100 a share, and now you're going to be willing to pay $300? Like Palantir stock was $6, $7, $8 2 years ago. And now you're piling in at 55? Like, okay, do what you want. But I'm just saying, like, we pulled forward a lot of gains in regards to these stocks. Now, on the flip side, we got another very hot stock, and it's still a big opportunity, and that's SoFi Technologies. SoFi, now we're up 67% on the stock. It's booming, but this one's still a major op in my opinion. And the reason being is you have several different factors going for the company. One is if you have a better economy, a stronger economy, that's going to benefit SoFi. Additionally, if regulations can chill out a bit, that's going to benefit SoFi in a substantial way as well, right? Anything where you can get some pressure relieved on the banking system is definitely going to be good for companies like a SoFi, which SoFi is at the cross sections of banking, but also fintech. And they also help a lot of financial institutions out in many different various ways, right? Additionally, now you're not going to have the student loan drama that this company's had as an overhang for years. That's long gone now, right? And also, additionally, if you have lower interest rates, then you could be talking about refinancing picking up, mortgages picking up, car loans picking up, all those sorts of things. And so that all benefits SoFi, whether SoFi wants to take the risk on those loans or whether SoFi just wants to be the middleman and make a fee on that, right? They set themselves up great either way in regards to that. So SoFi, I think, is still an opportunity, even though that stock's been red hot. It seems like just yesterday we were down on SoFi and now like 67% gain like that. But it's still an opportunity. This one's actually still an opportunity in this market. Another stock that's still an opportunity, Cheesecake Factory. This stock is getting red hot. We're now up about 44%. The stock does not include dividends received from this one. And the reason this one still sets up very well is it's still dirt cheap. You're not dealing with an insane valuation that it's like, oh my gosh, it's priced in the next 5 years of growth. No. This stock hasn't even priced in the next year of growth. Like, this is a dirt cheap stock. Additionally, small cap, that's where you're going to see a lot of money rotating over this next bit of time to a lot of these small caps. It's what I told you was going to play out, and that's exactly what we're seeing today, right? Additionally, when people start searching for yield, which as Trump tries to force the Federal Reserve to lower interest rates, right? What's going to happen is people are not going to be able to make this 4 or 5% in savings accounts, CDs, and treasuries. And so they're going to start searching for yield, and people start looking at dividend stocks. Cheesecake Factory is a big dividend payer. So when you're searching for yield, Cheesecake comes up. Additionally, it has a growth story because of the North Italia expansion there and the Flower Child expansion. So you get a growth story. And additionally, you're going to see a movement over this next 12 months. And Wall Street's going to call it, basically, they're going to be looking for plays on consumer. They're going to be looking for plays on the consumer. And why are they going to be looking for that? Because inflation is not slicing and dicing people. The employment market's very strong still. And we have wages that are in a good place, right? And plus, I think Trump, obviously becoming president, I think that just adds like an extra fuel of like optimism in regards to how the consumer's doing, how the average person's doing, and can they afford to go buy some Nikes or not, right? And so that's going to be also something people are going to look at. And so it meets all the criterias on where people are going to be piling into. So when I look at a stock like Cheesecake Factory, I say, that's still like an incredible opportunity. It's still dirt cheap, and it has all the things, it has all the check marks that people are really looking for in this market for this next bit of time, right? So yeah, that one's still a huge opportunity. PayPal, still an opportunity in regards to this one. PayPal stock did tremendous when Trump was president in the past, right? And you see something like that, don't just bank on that. But if you look at what's going on with PayPal's business model, and additionally you kind of think about, once again, regulations not being as much of a concern, that could bode very well for PayPal, who's kind of, back to being a super innovator again with Alex Chriss at the helm at this company. And so if you get some regulations removed, this company can probably move even faster, right? And operate even more profitably. And so that's another thing you got to factor in here. And so PayPal's still an opportunity. We're up 30%, up $59,000 in the stock. It's still a big opportunity out there in the market. Amazon, still a major opportunity in this market. AWS growth is accelerating. E-commerce business should strengthen next year, and we should see the best growth rates out of the e-commerce side of the business since probably 2022, if not 2021, in regards to the e-commerce business. Like the e-commerce, probably since 2021, we should see phenomenal e-commerce growth rates for this company. The strongest it's been in a long time. Advertising is going to continue to pour in 2025. And then AWS growth has been accelerating. So Amazon sets up very well. Very well for this next bit of time. That one's still a big opportunity. Revolve's not a stock I talk about a lot. It's a stock I hold in the public account. We're up 157% on the stock. I'm up $18,000 in this one here today, up 26%. Revolve might be an opportunity. This is an e-commerce company that is in the clothing space. Their average selling price somewhere around $300 roughly. They sell huge, the female demographic dresses and those sorts of things. Man, look at what's going on with this company's business model. And I think things are going to get a lot better for them in 2025, being that the consumer is not getting sliced and diced by inflation finally. So I think the female consumer base is going to be looking a lot better in 2025, just to be quite frank. So net sales were up about $26 million year over year, while cost of sales was only up $14 million. So their gross profit exploded to the upside, $144 million of gross profit from $133 million of gross profit, right? They kept fulfillment in check. Selling distribution, somehow they pulled a rabbit out of the hat. They actually brought that number down on a year-over-year basis, which is incredible because revenue's up 26 mil. Marketing, they didn't increase marketing in the quarter, which is unbelievable because, once again, they increased their net sales $26 million. G&A, general and administrative, they brought that number down, even though revenue was up substantially. And so what you're seeing is income from operations fly for the company, $14 million in income from operations versus $324,000 in the previous year's quarter. Net income went to $10.7 million from $3.1 million in the same quarter last year. Diluted EPS went to 15 cents from 4 cents. What I just showed you right there is what you're going to see next year in Nike and Estee Lauder and a lot of those companies. As those companies' revenues start to trend back up, they've all done major cost-cutting measures. And so what you're going to see is their income from operations of these sorts of companies fly to the upward side in 2025 specifically and in 2026. It's going to be a multi-year cycle for those sorts of companies, okay? So you've got to understand, when these companies, they're not going to have to increase revenue. Like, people are on a false assumption thinking like these Nikes and these Estee Lauders and these sorts of companies are going to have revenue fly to the moon next year or something like that. No. If those companies are just reporting in 2025, revenue's up 5, 7, 10%, you're going to see their margins explode to the upside. You're going to see their net margins explode to the upside. The net income of these companies explode to the upside off of just very small revenue numbers, as you just witnessed in Revolve. Is Revolve's revenue skyrocketing? Like, oh my gosh, their revenue's up 50% year over year. Oh my gosh, they doubled up their revenue. No, it's up 26 mil. Big deal. But look what happened to the margins of the company. They exploded upward. Look what happened to profitability. And that's exactly what you're going to see in so many consumer names in 2025. It's not even going to be funny. That's where the biggest opportunities are. Now, in regards to Revolve, it's a grade A income statement. It's unbelievable. The total assets have increased $62 million since the beginning of this year, right from $608 million to $670 million. Meanwhile, total liabilities have only increased $27 million. Like, bravo, baby. Yes, Revolve looking great. Now, Estee Lauder, huge opportunity. Huge opportunity. This is buy every share in sight for the remainder of this year. Buy every share in sight for the remainder of the year in regards to this one. This is another perfect example of a company when their revenues start to come back, whether that's in the first quarter, second quarter, third quarter, at some point the revenues are going to start trending higher. It's just a debate of what quarter it's going to be in 2025, right? When that starts playing out, you are going to see the profitability of this company explode upward. And it's going to continue in 2026 to a much greater extent. So Estee Lauder, for very rarely stocks go through generational buying opportunities. Estee Lauder's in a generational buying opportunity right now. With the brands this company has, they got a CEO change, they got management change, there's a whole family feud with the Lauders. It's a whole mess. And I'm telling you, there's going to be so much money to be made here over the next 2 years. That's where the most money's made. When you can own great companies that are going through it, and no one cares about their stocks and everybody's destroying them, that's where the most money's made. That's where the most money's made. Don't be surprised if Estee Lauder is $180 plus stock 2 years from now. You're looking at the stock today at $60. Do not be surprised at all if Estee Lauder is $180 2 years from now. That's all I'm going to say about that. Unbelievable, right? So, and people don't think about that one as like some big money maker. And additionally, guess what? They're going to pay out a lot of dividends over the next few years as well. As the profitability of the company starts to come back in 25 and especially in 2026, they're probably going to up the dividend. So the amount of dividend money you're going to have is going to be pouring in. Yeah, it's very attractive. Huge buying opportunity. Nike, generational buying opportunity in Nike stock. Generational buying opportunity. They've done so many cost-cutting measures that are all going through in 2024 and a last few that will go through in 2025. The company's revenues will start uptrending, in my opinion, in 2025. And so when the revenue starts uptrending, given how much they've done in cost-cutting measures, you're going to see the earnings per share go up at probably a 3x to 5x clip versus revenues. Meaning essentially, if revenue's up like 7%, you're probably going to be looking at net income up 21%, 28%, 35% on a year-over-year basis. It's a generational buying opportunity in regards to Nike stock right now. Celsius, huge, big buying opportunity in regards to this one. This stock has been hammered. No one wants a piece of it. A lot of people don't even understand what's going on with Celsius. They see the numbers and like, what, did everybody stop drinking Celsius? No. They had this distribution deal with Pepsi. Pepsi's leaned out inventories massively in 2024. And from what it sounds like with the management team, Pepsi's about done that now at this point in time, which means in 2025, Celsius, you're going to likely see the business model get back to growth and then very substantial growth. Okay. And if I take you through the latest income statement they reported here, it was garbage. It was trash, right? It was a grade F. But that's because of the Pepsi decision there. So revenues was down $119 million. They only brought cost of revenue down $47 million. And so when you're in that vicious cycle where your revenues are downtrending that much, it just destroys your profitability, right? And so the net income of the company was like $6 million, like nothing, right? It was just a trash quarter. But I said the great news is this quarter next year, we got a cake quarter. Can you imagine the growth rates Celsius is going to show in this quarter next year? That's what you got to keep in mind. Yeah, it sucks. It was a trash quarter. It's been a trash year for Celsius. But this story is about to get a whole lot more exciting, which is why I've started buying the stock here in the fourth quarter. And I'm going to continue to probably buy shares for at least the next several months in regards to this one, because I think you're going to see a big bounce back in revenues in the second half of next year. Could even be in the first half of next year, but I don't want to get too bullish on it. But what I feel very comfortable predicting is a major bounce back in revenues in the second half of the year. And I mean, you're going to see the company's margins and profitability explode to the upside again. So Celsius is looking really, really good in the second half of next year. And so you might say, why am I buying it now? Because the stock will already start moving in the first half of 2025. You already start to have that stock uptrend in the first half of 2025. So you got to keep that in mind, right? A stock, if you want to talk about some spec opportunities, potentially, the Planet. Like, the news was kind of devastating yesterday in regards to Florida and no legalization there for recreation. But at the end of the day, I think Planet will make it through to the other side. Fubo, I think it's another one. Everything continues to get better with this one, and people just are not recognizing it. And so that's another opportunity I would look at, and I'm just like, very attractive from the spec side, very attractive. Everything's going the way you want it to go, and that usually bodes very well for stocks, right? I also did this video 2 days ago on the channel. I'm not sure if you guys got to see this one. 6 stocks to buy now, November 2024 edition. So if you want to hear me talk more in depth about 6 stocks that I view as insane opportunities in this market with unbelievable upside ahead, definitely want to check out that video, okay? Now, last thing I want to finish out with here today, okay, folks, is don't always run the same way everyone else is running, right? Make your own path. You've got to anticipate where the sheep are headed next. That's a big part of the stock market. When it comes to stock market investing, you've got to understand the financial statements, the income statements, the balance sheets, the cash flows. If you don't understand that stuff, you got no chance in this game. You got to understand that stuff. Then you got to understand P ratios. You got to understand forward P ratios. You got to understand how to value a company appropriately, right? But then when we get even to deeper levels, you got to understand to recognize where the biggest opportunities are in the market at a particular time for your portfolio, because not all times are the same. In 2022, if you were buying the value and dividend stocks, it was the worst decision. Many of those stocks have actually gone down since where they were priced at in 2022, right? However, in 2022, it looked like you were in a great place to be. That's a great place to hide out. The dividend, the value stocks, those ones are holding up well. Look at tech stocks. Tech stocks getting absolutely wrecked in 2022. But that was the biggest buying opportunity. So while everybody was selling those tech stocks, I was buying tech stocks left and right. I'm sure a lot of you guys that have been watching me for years, you were buying tech stocks left and right. And you've now made hundreds of percent gain, maybe thousands of percent gain in regards to those stocks, right? Incredible buying opportunity. So now everybody really loves the tech stocks. There's money to be made in those stocks. Everybody's piling into, the stocks that have been performing great, and they're completely leaving on the wayside many of these value and dividend stocks. And if we just fast forward a couple years from now, people would be like, oh, that was kind of stupid. Like, why were we all piling out of those value stocks, those dividend stocks? We should have been piling into those, if anything. Like, what were we doing? And so in the stock market, you got to recognize where the sheep are headed, and you got to anticipate where the sheep are headed, because the sheep will be headed into a lot of these value and dividend stocks over the next few years. They're not in the short term. They're not in the next 3 months. But over the next 3 years, they will be. They will be substantially. And that will be a time period when we're going to look elsewhere for opportunities, right? So, and by that time, maybe we're looking at puts heavy. Maybe we're looking on some bets against the market. That might be a different construct at that time, right? But that's the way you always got to be one step ahead of the sheep. You always got to be one step ahead of the sheep. And the sheep are a lot of Wall Streeters. You might think of sheep as retail investors. Are there a good amount of retail investors that are sheep? Yes. Usually it's newbies to the market, people that don't know what they're doing. They have no clue how to read an income statement or how to value a company or nothing like that, right? Those folks need my private group. They need to learn all that stuff I teach in those course curriculums. Those people a lot of times can be sheep. They have no clue what they're doing. They're just, whatever's a hot stock. Palantir's going up. Look what Palantir shares. They're clueless, right? Wall Streeters, freaking clueless. 90% of these Wall Streeters, they don't impress me. They're sheep. They have no clue what they're doing. They're following each other around. If all the other Wall Streeters are selling, they're selling. They're all giving their same bearish points they give. If they're all buying, they're all buying. Like most of these Wall Streeters don't have a clue. And many of them are stuck in either full bearish mode all the time or full bullish mode all the time. Or it's just a job to them. You understand, a lot of these Wall Street folks, they're not passionate about finance. They're not really that passionate about stocks in the market. It's a job to them. And there's a difference between when you do something for fun or it's like it's a job to you. I love stock market investing. I love it. Like, this is life to me. This is life to me. I've been doing this. When I had a few $100s to my name, the money is just a byproduct. Someday I might have hundreds of millions of dollars. Some days I might make $100 million in a day. Means nothing. It's the same as if I made $100 or $1,000 or $10,000 or $100,000 in a day like I did yesterday, right? Yesterday was a 6-figure day. Today's probably a 6-figure day as well if I add up all my different portfolios, right? At the end of the day, It's just money, but it's fun. It's so much fun, right? I love going through the bear markets too. As sick as that might sound, I love it. It's so phenomenal because whenever I go through the bear markets and the tough times, you know what all I'm thinking about? I'm thinking about how much money I'm going to make when it's all over. That's what I'm thinking about. And I'm like, how much success I'm going to have when this is all over. In 2022, you wonder how I got through that vicious bear market, which I got brutalized that particular year because I was thinking about, damn, I'm going to be making so much money coming out of this mess, right? When I was buying those Meta shares at $88.94 and $100 something, all I was thinking about was, geez, I'm going to make so much money on the other side of this. So the bear markets can be so much fun, right? Next bear market, though, the difference is, next bear market, I'm going to make stupid money on put options. I'll be ready for that. Alrighty, guys. Much love as always. Appreciate you guys joining me. Thanks so much for being here. Additionally, if you're looking to access all my premium courses, get your knowledge up to a much higher level than where you're at right now, then go ahead, click the pinned comment down there, fill out a form. We'll see if we can get you access to everything either the end of this week or maybe next week. Okay? Much love and have a great day.